My name is Mary Kirk. I'm a business advisor with the Small Business Development Center at Jacksonville State University. Today we're going to talk about best practices for record keeping and bookkeeping. Records are the basis for the financial story of the business. First, retain and organize all supporting documents. Keep them organized between assets, liabilities, equity, revenue, and expenses. You need to distinguish between employees and contractors. Employees have a permanency. A contractor is somebody that just comes and does a job for you. Document details on the purchase of vehicles and equipment are important to keep. If you buy a piece of equipment, you need to know the date you purchased it. You need to know the price you paid, and if you traded something in, because all of these will be important when you do your taxes for depreciation. As far as bookkeeping goes, you need to keep all personal and business finances separate. You don't ever want to intermingle your personal and your business funds. Don't be tempted to take out of the business money to use personally. If you're a sole proprietor, you just want to set yourself up a draw, take out a certain amount of money each week or each month. Keep records of all your deposits. You want to make sure that your revenue gets counted correctly, but you don't want, if you get a loan, for that to be counted as revenue, because you don't want to have to pay taxes on money you really didn't earn. You need to track every expense so you get the most out of your deductions. You need to reconcile your bank account every month. This keeps an accurate record of actually how much you have in the bank. Okay, when you get to a point where you can afford a payroll service, it's good to get one, because that way your payroll taxes are filed timely. That way you don't have any penalties. So it's good to outsource your bookkeeping as soon as it's practical. That way you have a professional that's keeping an eye on your finances for you. It simplifies your tax preparation, and it also lets you spend more time running your business and less time on the administrative side. Know the taxes that your business is responsible for. This slide lists all of the different taxes. Some may apply to your business, some may not. Realize when to consult your accountant if you're considering changing your business structure. If you're thinking about making a major purchase, such as an automobile, a large piece of equipment, you'll want to consult them. And if you are going to try to do your own bookkeeping and not have an accountant other than just doing your taxes at the end of the year, you want to invest in an accounting software. Accounting is the language of business, and it's important for small businesses to have an accountant. Accounting provides various pieces of information regarding your business operations. It helps you with tax planning, managing your business decisions, and investments. Common mistakes businesses make: commingling your personal and business funds would be the biggest one. Mistaking profit for cash flow, and infrequent bookkeeping. Failing to save original receipts is also a big mistake. You're going to need those if you ever get audited, and plus it helps you keep your revenue and your expenses correct. Red flags on financial statements: several years of revenue trending down. You're in business to make money, not to lose money. So if it's trending down, you need to back up and take another look at things and see where things are going wrong. Large other expense on the income statement: you want to specify what each expense is. You don't want to just lump it into other. And an unsteady cash flow is also a red flag. A large inventory balance is definitely a red flag. You don't want to have more inventory than you can sell. And consistently higher liabilities and assets, red flag. You need to communicate with your accountant. They're there to help you. They're there to help you grow your business. So some tips for communicating with your accountant is to be proactive, to talk to them on a regular basis, and talk to them before the end of the year, because if you wait till the end of the year, then it's too late to make any changes for that tax year. Understand which documents your accountant needs. They're going to need your bank statements, credit card statements, anything that shows financial transactions that you've made throughout the year. Provide your documentation in an organized manner. That'll save your accountant time and that'll save your money. Often the accountant charges by the hour, so the more organized you are, the less it's going to cost you. Notify your accountant if you get IRS correspondence, because they're going to be the ones to take care of it for you. You want them to talk to the IRS so you don't have to. Okay, and some things that are specific to 2021 taxes, COVID related. If you got an EIDL during the year, you need to make your accountant aware of that, because an EIDL is a loan. And also if you got PPP, the Paycheck Protection Program, those funds deposited directly into your checking account, so your accountant needs to be aware of that as well, and so that it's not shown as revenue. And also, if you did get PPP, you need to make sure that you file for forgiveness on a timely basis. So I hope this has helped you better prepare, for your taxes, keep doing your record keeping and your bookkeeping. And I thank you for spending the time with me today.